Good morning, traders. It is Wednesday, November the 20th. Taking a look at the charts, we got the SP 500, and you can see here the market's been on this tear. They're starting to struggle a little bit today. We'll see if we get some selling. It looks like the markets are starting to give some mixed signals in terms of money's kind of starting to move into options. We're starting to see the VIX move a little bit higher, and the safe havens are giving mixed signals. Some are up, some are down. So it looks like overall we're starting to get into a little bit of uneasy times. And more or less, if you take a look at this distance we've got from the 200-day moving average, whenever we get roughly that distance away, we see the market put in a top and start to pull back. We've seen this happen over and over again. And sometimes you can get overextended, you get some big blow off move. But overall, we've got a pretty far distance from the 20-day and from the 200-day. And we're starting to get just some early warning signs that the market could be starting to put in some type of top here, and we could see the market struggle and start to correct. Now, overall, if we take a look over the HYG, which is the high yield corporate bonds, these are higher risk bonds. More or less, you get a higher yield taking corporate bonds because companies have a higher chance of going under and they need money and they'll pay you a higher percent for your money. And overall, we can see here, if we take a look at this recent price action, let's just zoom in here. Overall, we've got depending where you go, if you go from candle lows, you go from closing bars, where they are. Closing bars is typically where I find that the strongest areas are. But more or less, yesterday we saw this start to come down, and this is a big formation here. Whichever way it breaks out of here is probably going to be a significant move. And overall, we're coming down to these lower levels, and we tend to see the high yield bonds roll over and underperform before the stock market. It's an early warning sign. So if this starts to break down over the next few sessions and starts to break through support trend lines, especially if it starts to break this low, if it starts to break this low over here, then things are going to get really ugly. It'll trigger a bunch of selling, and then we're going to have a couple other pivot lows over here that'll trigger more stops, and it could have a big flush down and really unwind down into this lower level, and that could be a very good early warning sign that the stock market is starting to get a little bit toppy. Now, if we take a look over at, let's take a look at the VIX this morning. Equities are trading slightly lower, and the VIX is having a little bit of a pop to the upside. Obviously, we need to see the stock market have a big down day, and that should send the VIX jumping 10 or more percent very quickly and easily. It is in this lower reversal zone, this price here where we've seen some pretty explosive moves in the past. I feel as though it's primed and ready for another pop up into the 16, 18 area, maybe even beyond there. With just even a minor market correction, it should have a very quick pop in value. Now, if we look at where some of the money is flowing today, money is flowing into bonds. You take a look here. You can see here it's been performing fairly well. It rallied up, took a couple side steps between the 20-day and the 5-day, and then broke through yesterday. Today it's continuing to move higher. You could argue here it's broken a short-term downtrend line across these tops here. Yesterday it closed right at it. Today it's gapping above and starting to move up. Overall, the trend is just starting to turn to the upside for bonds. It's breaking out, and the momentum here is now starting to go up. We're above the 5-day, the 20-day. We broke this resistance. It has still made a lower low. It has yet to break this previous high, but overall the momentum is saying, hey, there's at this point the trend is shifting, and it's still early, hasn't really broken out yet, but the trend is up and it's expected to continue to move higher based on short-term technicals. If we take a look over at some other safe havens, if we take a look at gold, gold had a little pop this morning. It's starting to fizzle out here, actually with some elevated volume, good selling volume spike there. If we look at silver, it underperforming today. So we're seeing money move into bonds, the big safe haven, which are bonds, and the money continues to still move out of precious metals. They're just not performing. And a big chunk of that could be the US dollar index today has had a nice strong pop, and it's moving higher, and that could be putting a little bit of pressure on the metals at this point. Looking over at energies, natural gas up 2%. Yesterday we had follow through selling. More or less it came down and tagged the 200-day moving average or got real close to it, and it got oversold. It was almost right at our first target. We were 10 cents off on our ETF. Um, I know some of you pulled the trigger and got out of the play, locked in some gains for T1, not quite waiting the 10 cents because it did a pause there for a little bit. We were waiting for a couple more ticks to go up and it would have triggered our target, but overall we've got an oversold bounce. We're stuck. It could still continue to go higher up to this 5-day moving average, which naturally is going to be a resistance zone for momentum. Usually it'll get stuck under the 5-day for some time. You can see how it happened over here. You can test it sometimes, but until it starts breaking it frequently and showing momentum, it's stuck in this downtrend. Of course, we've got this pivot low. More or less those lows come right up to the 5-day as well. So if it does continue to rally today, we could go underwater for a day or two. Hopefully sellers will step back in and it'll fade back out. You can see what happens when natural gas is in a downtrend. You get a pop and then a fade and then a pop and then a fade and then a pop and a fade. So we should be able to see this pop and fade hopefully a couple more times, and hopefully we'll get our first target and hopefully hit our second target as well going forward. Looking over at crude, took a beating yesterday, came all the way down. It's testing long-term support across all these candle lows, these multiple lower wicks, and this lower wick came down and hit this level right at our blue support line from way back on the chart. Although prices traded through it a lot, this is a long-term support zone. Price came and stopped right there, and today it did flush down this morning. It's kind of bouncing back up here. But overall, if it starts to break this is a falling channel or a rising channel that if it starts to break to the downside, we could really start to see this pick up speed. And I like the fact that there's a lot of different pivot lows here. Low, you've got a candle low, you've got multiple of these lows here just making nominal new lows. And this one and this one. And of course, the closer more lows are together, the more price can unwind when it starts to get there, because there's going to be different traders getting in at different times saying, I'm putting my stop under this low, and there'll be a series of people with stops. And what happens is once price starts to break one stop, you get a flush of sell orders that pushes price down. It triggers another.
An alert target has
and
been
all these are
reached.
close together. So you can see a very sharp, swift move to the downside if this starts to break down. If we start to form a little bit of a bear flag here, we may look for an inverse play in some way, whether we get an inverse energy sector ETF or inverse oil play as get a little bear flag forming here for the next move down. And if it starts to break these stops, it could get over exaggerated and come down to this 51, 52 area. Anyways, that's about it for this morning, and I'll talk to you in a little bit. Bye-bye.